Welcome back to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, it's zinniawealth.com, ZINNIA wealth.com, 833-368-3680. So you hear these formulas out there about how much you should spend in retirement. And a lot of them you'll see that's been there for an awfully long time. You need 80% of your working year's income in order to be happy in retirement. There's a new survey out there from T. Rowe Price, and they say a lot of people are living on 66% of their working year's income. What's your reaction, Charisse, when you see that people their income's going down, 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 down in retirement? I don't like the sound of that.
I think there's big banks and brokerage firms out there that don't want you to spend your money because they get to keep less.
Okay.
That's what I think.
Okay.
Because let's say you make $100,000 and the average was, hey, when I retire, I'm going to need $80,000 a year to live on, which is legitimate. And then now they're saying, no, let's do 66%.
That seems like a pretty big hit.
So that would be $66,000 on $100,000. My question to you is, if you're making $100,000 at work, we know after your 401k contributions, taxes, and everything, you're probably netting out $70,000 to $80,000. That's your bring home, right? Potentially. But what if you could retire and still get $100,000 a year in income? That's what I'm talking about. Because why are people talking about lower numbers when the first 10 years of retirement in your go-go years, because there's going to be no-go years and then there's really going to be slow-go years, right? So we go go-go years, slow-go years, no-go years. So why not for the first 10 years of retirement, we blow the roof off and we do 100%. And or more. And the reason is because the confidence level is low. After a stock market just continues to take off, and we know there's a potential crash, especially on the back end. So people will start to lower their income wants. They make sure their needs are covered, but their wants, they lower because they're like, maybe this is a time to shift gears and those types of things. I don't care if the stock market is booming or going down. We front load your income. If you come into us, I'm not going to guarantee it, but I can say 9 out of 10 times, or maybe even 10 out of 10, it's pretty close, that we're going to show you a way to get 20 to 30, sometimes as high as 40% more in income than you ever thought and imagined you can collect. And I know you're thinking this is insanity. No, I learned this 15 years ago and 10 years ago. I really figured out the math on this. And this is what our clients are doing. So don't settle for less. Let's plan for more. Let's see if we can plan for more. Because isn't retirement all about enjoying those go-go years, enjoying the slow-go years, and enjoying the no-go years? You're going to enjoy those no-go years more if you really take off during your go-go years and you do it right. Because this is what happens, Randy. We're past our go-go years now. Now you're 75 years old and you're in the slow-go years. And all of a sudden, things hurt. Body hurts. You don't feel as whippersnapper as you used to be. Trust me, I hear it all the time. And then you're like, well, my portfolio continues to grow. It's doing really good. It continues to grow. And you're thinking, why do we have this much money here right now? I didn't know we were going to have this much money here right now. Why didn't we spend more during the go-go years when we're 60, 65 years old? This conversation happens like clockwork almost in every household if you do not have a financial advisor that focuses on income and the investment plan. And I know why people don't do it, Randy, is because we got to save for long-term care. What if one of us go into long-term care? Well, yeah, that could be costly, but let's really figure out the math because we build that into the income plan. So we will base on how much you spend in your go-go years based on how much we might project we need for long-term care if we ever need that, right? Some of you are like, well, I want to leave a big legacy. How much do you want to leave? You want to leave $1 million, $2 million, $4 million? Let's do the math on that. Is it that necessary? So I think it's more of a sticker shock, Randy, when people come in here. They're like, wow, I've never seen a plan like that. They sit back in their seats and they're like, wow, where did you come from? Right? And because we have very sophisticated software that we keep very simple that I've had to rejigger over the years to help people see it. If you don't see it, you don't believe it. So this is why we give these free consultations to build your income plans, your tax plans, because we want you to use it. We know once you see it, you'll be like, wow, I've never seen something like this before. And so we're really proud of it. And let's spend more in our early years. Even if you're like, Charisse, I'm a Dave Ramsey fan and I just have a problem spending because I've saved my whole life. Well, I'm going to teach you some things. You can still be a Dave Ramsey fan, but let me show you what Dave Ramsey doesn't teach you or show you. He gets you to retirement. He doesn't get you past that phase, right? Susie Orman gets you to retirement. She doesn't get you past that phase. That's my job as a retirement professional. I get paid to do this, and boy, are we stinking good at this. And this is why I love coming to work every day, and my team does, and our advisors do, because they feel the same way, because they just know this is different. I've had advisors work with us from other firms, and they're just like, this feels different. I can do this. This makes sense, right? And then you can feel it as a customer coming in. You're like, these people love what they do. These people are actually really good at what they do. Wow, we're getting all of this for free? You mean my last advisor was charging me 1%, and they just did the investment plan, and you're going to charge the same fee, and you're going to do all 5 pillars of retirement in that same price? Yes, that's what we do. That's what retirement planning is all about. And we're happy to do it, and we're honored to do it. We've been doing it for so long, it's like clockwork for us. So we're going to make it easy for you to understand, and we're going to build that plan for you so that you feel comfortable spending more than you ever projected.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.